My name is Nick. I'm a full-time trader and entrepreneur. We put out tons of stuff for free for traders.
These are real trades. This is real money. I'm putting my money on the line.
This is going to be a live trading video here, locking in over $1,000 on this trade.
Wow, I'd love to get in on this.
Technical insights that really look good to me.
Here we go. We're live.
Well, hello, friends. Welcome back to another stream. Hey, everybody in the chat. We got a bunch of people in here today. What's up, you guys? 105 people just as we get going. Always cool to just see people hanging out in the chat before we actually get started. So thank you for being here. We got a lot to talk about today. The dollar is pushing higher. We've got gold making a move as well. The S&P 500 did a little bit of a bounce back, so we'll see if that can last. There's a whole lot for us to talk about. So before I get started, I do want to just say, if you are new to my streams, if you have not already been watching my content before, welcome to my channel. I share all sorts of trading coverage. I cover what's going on in the markets. I share my own analysis, and I share a little bit of my trading journey as well. If you're new to my channel, do me a big favor and hit that subscribe button down below. I've noticed in the analytics of my YouTube channel that a lot of you guys who watch are not actually yet subscribed. So hit that subscribe button so that you get notifications from my channel if you like free trading content. So without further ado, we got a lot to talk about. So the big thing I do want to say is that yesterday we had a pretty steep sell-off, but then towards the end of the New York session, and going into the Asian session a little bit as well, we did get a little bit of a boost, a little bit of a bid for stocks around the world. Now, that's a big thing. And you might say, you know, I don't trade stocks. That doesn't matter to me. But they all sort of travel and trade together. Currencies and stocks, they are not isolated events. They tend to have some level of correlation in one way or another throughout time. So with that said, we have the dollar rising, continuing to rise. We have the pound dropping dramatically today. We see the gold market making a stab at pushing higher. And so there's a lot for us to talk about. So let's go ahead and jump into the charts. Thank you again for being here. Welcome back to the show if you're a regular. And let's do this thing. So let's see what we got to look at. I do have a couple trades going right now. I have some really good trades going right now. So maybe we will talk about that as well. I shared those in Discord yesterday. For those of you guys who are in the Discord, I dropped a couple trades yesterday that I'm in. So far, looking pretty promising. I've got them pulled up on my other screen, so we will see if we can get into some of those and talk about that in just a moment. I do want to start with just the currency heat map before we jump into everything. Let's go over to the website. You guys, anytime you want, feel free to head over to a1trading.com. This is our company website, and it's got tons of free tools here for you. So we'll head over to the currency heat map right there and check this out. So let's look at the big picture here, and what we can see is that we do have quite a lot of volatility still on the board. Very checkerboard, strong colors here coming in on the heat map. So what this is telling us is that the dollar and the yen both remaining strong right now, whereas we have some weakness coming in for the pound. The Canadian is actually holding its own, which is interesting because the Canadian dollar yesterday got slammed, right? And then the New Zealand and Aussie both taken a hit, with the Swiss franc sort of mixed somewhere in between, and the euro sort of mixed in there as well. So the big winners for the day seem to be the dollar and the yen. So same theme. We've had this for the last few days, and this sort of plays into this concept recently of risk on versus risk off. Right now, we do see a little bit of an unwinding of investments from that higher risk area into the lower risk area. So I've actually sort of switched, at least for now, to be cautiously risk off, and it's a very big deal because I have not been risk off in quite a long time. I'm going to talk about that, and I'm going to point out some of the things that I am personally watching and some of the things that I'm looking at. I do at this point sort of have a sell bias for the first time in a while on the Australian dollar and on the NZD as well as the Canadian dollar. Now, I'm not like saying these things are going to crash to nothing, but what I am saying is that I have a slightly more bullish bias on things like the dollar, things like the yen, and things like the euro than I do on some of these bottom currencies, which is very different than what I would have been saying 2 months ago. 2 months ago, I was buying a lot of the dips on things like the Aussie dollar, the Canadian dollar, and the New Zealand dollar. And you might be asking, well, why would you switch? What causes that switch? Well, this recent price action that we have been seeing is in response to some of the high volatility, or the high volatility is in response to some of the news and some of the latest developments globally. We have seen the Fed say that, hey, we're sort of a little bit far off. We've seen the yields really make a move here in the U.S. Let me show you guys this trading economics. This is a big deal too. You go over to excuse me, bonds. The U.S. bond market is moving, which is a big deal. You can see bonds really selling off there. I would also like to see if I can find where is the 10-year bond. Yeah. So that you've got the 10-year bond moving. I'm trying to remember where on this site it is. I'll have to look at it later, but the 10-year also kind of making a move, and we see the dollar responding to that very positively. We see a very strong dollar push here. Now, with this concern around the potential Delta variant, with seeing economic slowdown and slower recovery, there's a lot of hesitation to go buying things that are quote unquote high risk, things like the Great British Pound, things like, some of the individual stocks out there, right? There is a push away from those things and into safer assets at this time. Some of the safer assets that I'm thinking of when talking about risk off are things like the USD. You've got things like the JPY, which has been strengthening ridiculously. You've got things like gold, right? You've got things like CHF and arguably euro. Okay. So these are things that are considered slightly more risk off. What that means is that people tend to buy these instruments. They tend to flock to cash. They tend to flock to gold during times of fear and sort of concern around markets. As we spoke about yesterday, let's take a look at the S&P 500 really quick. And what you can see is that the SPX here has taken a pretty sharp dip. We have seen an aggressive sell-off, not one that we have seen since May. We saw a pretty steep sell-off in May that was met with some buying. So maybe we'll get a repeat of that. Maybe we do see buyers push higher. I'm not willing to say that this thing is going down to the floor, but I do think it has potential to maybe dip a little bit further. And I don't necessarily want that. I do have a trade on right now that has been doing quite well so far. We'll see if that one wants to keep playing out on the SPX 500. But with everything going on with the Fed's latest sort of dovish speeches and inflation concerns, you do just have a lot of piling up here that may cause markets to stumble or at least take a breath, take a pause here. And so right now I do have a at least short-term view on or priority towards the more risk-off investments at this time. So, I'm not real willing to full blown, say that the S&P is coming down to the floor. I just think that it has some potential to continue lower. I think that, risk off may take a turn here, and that things like the JXY, for example, the Japanese currency has, found what seems to be a bottom. We've sort of had this breakout to the upside there, which seems to want to have more upside. And you look at these things that have been sold off pretty aggressively, like the yen, and it may have room to do a pullback somewhere on the higher time frames to something like the 200-day moving average. That's a lot of times what we do see in markets that get stretched quite a bit from their moving averages, right? You have this example here where price just, it had a really great run to the upside. And then once that run had finished, it was a pretty quick move back down to the 200-day moving average. So like I said, short term, I am a little bit more biased towards risk off currencies and staying away from some of the more scary ones. For example, AUD USD, right? This thing, if you've been buying this thing, look at how much resistance, look how much struggle has been in the way for buyers. This thing has been really, really bearish. And this is me coming from a place where, a month ago, I thought this thing was, or maybe a month and a half, 2 months ago, I was very bullish on this thing. I thought it had potential to head up to 0.8. Once it fell out of favor, though, and risk off sort of settled in, and we saw some dollar strength come into play, this thing has been really, really rolling over. And this doesn't mean I'm bearish on it forever. It just means that for the time being, sellers seem like they are in control. There has been some beautiful opportunities to be selling into this move. And for the most part, with that bullish thesis on the dollar still intact, it's shifted. My bullish thesis on the dollar was bullish, a month ago, and it's worked out really, really well. But now it's different. Now the DXY, for example, I'm still bullish on it, but for slightly a different reason. Now it's more of a momentum play. Now it's more of, okay, well, now we're sort of in risk off. Now we see a lot of people, holding on to their cash, moving into cash instead of those higher risk investments like stocks, the Aussie, etc. So that's kind of my bias with the dollar right now. Is I think that we've almost reached that target that I set out over a month ago here at 93.2, 93.4. We're just shy of that level. We have truly, seen a really impressive rise for the dollar. And I did mention that when I talked about the dollar, I mentioned that at first it was short-term bullishness on the dollar. I'm not willing to say I am long-term bullish on the dollar, but I would say that, we seem to be reaching a point here where the dollar may look to give back some of this profit. So I'm not necessarily bearish on the dollar, but lately the Fed has not followed through after, initially we had right around here, we had the Fed speaking about, hey, we're going to raise rates, this, and this. It looked really good. Unemployment numbers came out really strong. But then more recently, the dollar has been rallying and the news has been more, inflation is transitory. We've heard this all before. We're not looking to rush into tapering or anything like that. So we're seeing the dollar rally on that. And now it seems to be more of a cash play, meaning that people are more interested in, holding on to the dollar as a risk off investment or safe haven rather than buying the dollar for the sake of buying the dollar. So that's just my opinion on this. I think that the dollar may be topping out at some point, though I'm not really willing to call a top on it. Right? I think that you do have significant resistance here. I probably wouldn't short the dollar. We are still in sort of heavy momentum to the upside, but I'm also not willing to pile on long trades on the dollar as I was maybe a month ago. Again, if you've been watching my streams, you know that I was very bullish on the dollar around here and have since been trading it to the upside, had some fantastic trades on the long side for the USD. So And like I said, for now, I think I'm not willing to pile on the same number of trades. If we get something further developed, again, I'm not a predicting trader. I'm more of a reaction-based trader. So, I react to what I see and try and, ride the trends as best I can. So I'm not willing to call a top, but I am looking to not necessarily aggressively add to my dollar positions. So that's my thoughts on the USD. Let's take a look at some currency pairs now here. I know I did a sort of a big intro there. Let's take a look at Euro USD here for starters. So the Euro dollar here, I am bearish on this one. I did have a trade on the Euro dollar, and unfortunately, I got stopped out for break even just before it rolled over. Someone in my chat asked me if I was frustrated by that. And, I guess it's always sort of frustrating to get stopped out before it keeps going. However, it's sort of just part of the game. And the longer I've been doing this, the more you just come to accept that that's going to happen sometimes. So I did take a short position on the euro somewhere. Where was it? It was right here. Took a short around the euro and then price came down and then stopped me out on the way up here for a very, very small profit, and then decided to continue to do some crazy volatility before rolling over. I think with the euro dollar, I think we are probably headed down to 1.175 as I have been mentioning. So that's kind of been my target for the last few weeks. So we'll see if that can happen. If you find buyers from there, and it maybe turns a turn for the bull side, just because again, we have been quite extended to the downside. But this is really just going to depend on where we go here with risk off sentiment. The dollar getting strong is really interesting to me, because if you do remember, some of you guys who have been trading a bit longer will remember that about a year ago, 2020, we saw the euro get absolutely so strong off of the basis of sort of this carry trade unwind. If you don't know what I mean by that, the carry trade is essentially holding a currency that yields a higher interest rate versus one that yields a lower interest rate. So if I were to for example, let's say USD JPY, that's a terrible P. Let me try that again. JPY. If I was to hold this thing long, anytime you take a long position on one, you take a short on the other, right? So if you buy USD JPY, you are buying the USD, you are shorting the yen. So if the yen offers negative 0.1% interest, and then the USD offers positive 0.25% interest, there is actually a spread here between the two, right? It's not a huge spread, but it is a spread nonetheless. So when you hold this thing long, you theoretically collect positive swaps, right? Well, that existed on the Euro USD on the short side. The USD offered, I think at this time, like 2% versus the US versus the Euro, which offered 0%. So there was a spread where you could short the Euro and buy the USD and collect a positive interest. Well, once interest rates got cut in the US big time in response to the pandemic, we saw that completely unwind. A lot of short sellers on the euro dollar who had been collecting that positive swap unwinded their position. Well, we're in a different spot now. Now the US dollar does not look like it's going to be cutting rates anytime soon. So we have low interest rates in the US, but we also have low interest rates in Europe. So with everything said there, I don't expect the euro dollar to do such a massive run up like it did in 2020. Should we see more volatility and more fear come into this market? But I do think that from a technical analysis perspective, you do have a big zone of support here, just shy of where price currently sits, right down there at 1.17. So if price does make a move down to this level, you could be looking to tag and find some temporary support there off of that. Again, just going to depend on sentiment and where we go here with everything in terms of worldwide fears. I do have a trade that I'm going to talk about in just a moment, but I do want to do a couple more currency pairs before we get there. Check it out. The pound dollar is a big one. Center stage today is the GBP, because I talked about this yesterday. This signal here to me is super, super bearish for the pound. This to me was the last line of defense for the bulls on the GBP pairs. Here's why. So you've got the GBP on the daily chart in this really momentous uptrend, right? Strong buying on all these dips, lots of chances to go long there, ride that momentum. And then we sort of fizzled out. We started going into a sideways range. If you've been watching my streams for a while, at this point, I had been looking for some more upside on the pound dollar. I'd been looking for that breakout to the upside, and we never got it. We never got that breakout to the upside. I was looking for this trade setup here. I wanted to go long. I thought that the pound dollar had potential, but I never entered any trades. I sat on the sidelines patiently, and honestly, thank goodness I did, because look at this reversal that we are now seeing on the pound dollar and the pound pairs in general. We see this major area of support being rejected now today. So we actually have to mark this major level as no longer demand, but rather as supply. In fact, this looks so bearish for the pound dollar to me that I think that now, just from a technical analysis standpoint, from a risk off sentiment standpoint, and from a dovish Bank of England, BOE standpoint, I think the pound dollar is not looking so attractive to me right now. Again, you've got this range-bound market after a long uptrend. So you had uptrend, range-bound, and now even looking downtrend material here on the pound. Why is this spot such a big deal? Well, from my bias on a technical analysis standpoint, you had this major low back in April and late March, right? Where you found buyers, you had buyers stepping in and pushing off of these lows, clear demand in this area. But check out the recent candles. If we zoom in just a bit here on the pound dollar, look at that same area of what was major demand back then. Very little, if any, hesitation from sellers. Very little show of strength by the buyers in this area at 1.37. In fact, sellers were so strong, they were able to pretty much close this candle very, very bearish underneath that 200-day moving average, which is another key indicator for me of long-term trend direction. And now today, a massive, sort of nail in the coffin for the bulls on the pound dollar, in my view. This to me looks very, very bearish. And truthfully has a lot more downside in my view. Maybe not immediately. You may get a little bit of a bounce here. We do seem a bit extended, but I would not be too optimistic should price start to rally. I'd be more interested on the sell side, if anything. Personally, that doesn't mean that I'm going to be absolutely 100% correct. I have been wrong before, and I have the potential to be wrong again. In fact, I can guarantee you that I will be wrong at some point in the future. But the idea here with the pound is that was such a key spot for bulls to try and take a stab at pushing things higher. And they really did try a little bit here, but this lower high was just the signal. That was just obviously in hindsight, but clearly now you can see sellers just seem to be piling into this trade and pushing this thing lower. So, I wouldn't be looking for buys here personally, just because even if there is a bounce, I would say that the chances here of a full blown reversal, it could happen. But I would say it is much less likely than sellers looking to basically join this trade now that we have broken key support. You've got a lot of signals from the bears here that sellers are willing to push this thing lower. And where can we find support? We have to zoom out here to really think about this from a longer term perspective. Honestly, I don't really see any clear levels of support. That's kind of a scary thing to me. I mean, you could start fishing for stuff, but truthfully, I'm not really seeing key levels until you get down to a place like this, which is back towards early COVID levels, right? So you're talking about back in June of 2020, which is almost a full year ago. Actually, it's more than a year ago, right? So, and then you have September of 2020 that held the same spot. So honestly, that's a move all the way down to 1.275. I wouldn't bet that it's going to go straight there, but that's the next level of major demand that I see. So could we find a bottom somewhere in between? Maybe we do. And if we show some new price action signals that there is something there that could be bought, could be looked at, we'll have to reevaluate. Obviously, if you watch my streams, we do these Monday through Friday. Feel free to come back anytime. We share analysis each day. We talk about, these things going on, but really for me right now, there is no buying spots for the pound dollar. If anything, there is more opportunity to look to short this thing. I think the path of least resistance for the pound is lower. So, that's kind of just a reaction to everything that's going on right now. You've got such a push into risk off. You're seeing, so why is the pound dollar falling so hard? Well, it's mostly the risk on, risk off play going on right now. We see a major unwinding of people selling riskier investments and pushing into safer investments. So you might say, well, is the dollar really a safe investment? There's no such thing as a safe investment. Anytime you put money on the line, you have the risk to lose it. But trusting in the biggest economy, right, or one of the most influential economies out there, and putting your money into the dollar is sort of the place to be when markets are scary, when things look really daunting, and we are talking about potential slowdowns, potential turnarounds, and backtracking on pandemic recovery. That very quickly tells people, hey, I don't want to be in the UK's GBP. I'd rather be in the US dollar, because I know that, the UK has more, it has a more volatile economy than the US, right? The US's economy is so big that it is considered more of a risk safe haven place to be. Same with Japan, right? And then we're also seeing the same sort of stuff happening with like the Aussie dollar, right? The Aussie dollar is being sold into aggressively. So that's kind of the play right now. And until further notice, that is sort of my bias, is for that to continue. Take a look at the Aussie dollar here, absolutely getting tanked. We talked about this just a few minutes ago, but just another example of a risk off trade basically coming in hot here. We're seeing a lot of strength to the dollar, a lot of bearishness coming in on that Aussie, which was so optimistic about 6 months ago. So this is markets, you guys. This is the craziness of things happening. Things can change, and this is where, as a trader, you sort of have to be ready to adapt. So let's take a look at gold. Do me a big favor, if you're a fan of gold and you've been in the streams for a while, if you've been watching the streams, you know what to do. Drop a hashtag gold gang in the chat. And by the way, you guys, sorry if I'm sounding pessimistic. I'm not trying to scare people or to bring alarm to this. This is just markets. The markets do not care about our emotions. They do not care about our fears, about our desires. They only care about what they care about, right? Which is, finding the best value, finding the best trades and the best opportunities. And we're seeing traders right now pile into those risk off assets, things like the yen, the dollar, and the euro strengthening, right? And so that's what we're seeing. If you've ever heard the saying, trade what you see, not what you want to see, that's kind of what we're seeing right now. We're seeing a little bit of reversal. And so, we're seeing things like gold hold its own. We see gold strengthening today, finding a little bit of a bid. Question is the gold market going to, is it going to hold this time? Or are we going to see another big red candle here once we hit the 200-day moving average? Kind of a key spot right there is that 200. We talked about it last week. We are sort of coming back into play here. We did find demand yesterday, a lot more demand than I had thought we would. Bullish pin bar there, a little bit of follow through on this daily candle. So now the question becomes, can we clear that previous level? I think for bulls out there, they definitely would like to see that level get broken pretty decisively from both obviously you want the price to go up, but also from a signal of, bring in fresh buyers. A lot of times when you get something like this, there are a lot of buyers on the sidelines who would be like, okay, I'd like to buy gold, but I want to see it break out. I want to see the demand come into the gold market before I'm willing to go buy it myself. And so watching for 1830, that's going to be a spot for bulls and bears to contest one another. And I think that we are awfully close to that. I would imagine that we would see price make a push up to that level to retest that zone of resistance. And in just a moment, you guys, I'm going to be showing you guys the trade that I'm currently in. It's going well so far. I've got 2 trades open right now. One is going well, one is going okay. And both are move stops to break even though. So it's a good day. Anytime you've got stops move to break even, it's like a low stress situation for me because I know that, if let's say, for example, that you bought gold, let's say that you played it really well. You bought gold down here, right? If you're a longer term trader and you had initially had a stop loss down here, right? And then price started trailing up and then you were able to move that stop to break even. I really like that situation to be in because I know that even if I'm completely wrong for holding in, it comes all the way down. My worst case scenario is a $0 win, a $0 loss. And my best case scenario is a really large win should things go the way that I'm looking for, right? So, but with the gold play right now, I have pointed out, let me show you guys this. So this might be helpful to you guys who are new traders. If you've never heard of the COT reports, the COT reports are a filing that basically it's tracking the futures market, big players in the futures market and what their positions are. Think of like big institutional traders, hedge funds, big banks, right? They have to report what their positions are. And so you can actually go to our website, head over to a1trading.com. That's A1, the number 1, trading.com. Jump in there and then click over to COT data right there on the homepage. We've got a bunch of free tools for you. Make sure to bookmark our website, use it anytime you want. Oh, and also join the newsletter if you haven't already. Tons of good free value there as well. So anyways, I'm headed over to the COT reports page, and now I'm going to go down to where it says gold. And I want to show you guys this. So gold last week had a pretty impressive bid or buy up on the non-commercial side of things. So this is the institutional traders. And what you can see is that there has been a nice little bid up or an increase on the COT reports for the gold market, showing that for a few different consecutive weeks, right? 1 or 2 consecutive weeks, we have seen a large increase on the buying of gold, right, by institutional big traders. Big deal because, again, we were in this situation where every week sellers seem to be stepping up and pushing price lower on the gold market. But now we see a little bit of a flip side. Could we see that continue? Well, that's the question with the gold market. I think that right now you do see a little bit of a bid coming in for the gold market, and the big sort of barrier to me is, can we get past that 200-day moving average? Can we show buyers that the 200-day moving average has been secured, right? That's the idea. Something like that could lead to further push up and a move back to the previous high. I would say that it is very possible, especially if inflation concerns do continue. But I would like, before I get bullish, I would like to see that 200-day moving average get broken to the upside. So that's my thoughts there on gold. Do me a favor. What do you guys think? Are you bullish or bearish on the gold market? Let me get a sentiment check here in the chat. Just let me know, bullish or bearish. Thomas says, is the COT report free? Yes, it is. Head over to a1trading.com, like I said, and just go to that part of the site. It is completely free. So, yeah. Is he bearish on GU? I am bearish on GU, yes. I have been bearish on GU for a few weeks now, so really following through today. We'll see how that, whether or not that can keep persisting or not. But really strong to the downside there move for the GU bears today. Okay, we got some people bullish, bearish, forever bullish on the boomer coin. That's a good nickname for it. Currently bearish for the intraday, holding gold buys. Bullish due to the economy now. Bearish, bullish on gold, going all the way up. Okay, cool. Thank you guys for the sentiment check there. So yeah, I mean, I think for me, gold is sort of a mixed opinion. You do have a super long-term trend to the upside, right? Gold historically has risen, not by a tremendous amount, but I think last time I looked at something, it was like 3% per year, which doesn't sound like a lot, but that is still a bias to the upside over time. So will we see that continue to rise? That's the question. I would say a big signal for the bulls would be a breakout. If you get a big green candle above that 200-day moving average, I'd probably be looking for buys myself. So we'll see if that plays out, but that is what I'm looking at. I do want to show you guys my Euro Aussie trade. It is kind of moving nicely today. So I took a trade on Euro Aussie that looked so ridiculous when I took it. I don't know. You guys might think this sounds so stupid, but I actually bought Euro Aussie yesterday in that green candle. Does that not look like the dumbest buy you ever saw? I mean, obviously in hindsight, like you're like, oh yeah, it's already up, so it looks great now. But I did buy Euro Aussie. I took a small position with a fairly aggressive entry style yesterday, and you know, it's sort of a weird trade. I can't say that this one explains itself as easily as some of my other trades that I've talked about before, but I did jump into a long position on Euro Aussie. And I know people will say, well, Nick, that looks like chasing, you know, you look like you're buying at the top, but let me give you guys just a quick history lesson on this currency pair. So why would you buy Euro Aussie? Well, let me first show you guys the trade, just to show you what it looks like. So like I said, I ended up going long on Euro Aussie. Here's the trade that I sent out to members inside of our Discord. If you're not in our Discord, I share all of the trades that I take. So if I go long on something, if I go short on something, I will share it with members with a full reasoning. It's not a, copy signal service or anything like that. I share my trades with reasoning. It's like my journal. So I share like all of my trades in my journal here. So I ended up saying that I picked up Euro Aussie here today as price retests on the lower time frame. So this is a lower time frame trade that I took on the 1 hour chart with a fairly aggressive entry. In fact, it looked really aggressive when I look at it on the daily chart, but I took a very small position, just going to see if the momentum wants to continue with the previous market sell-off. Okay, and that's kind of the key component here with my Euro Aussie trade. For those of you guys who are following along inside of the private Discord, if you're already a member in the group, you might have seen that and been like, why the heck did you take that trade? It seems really weird. Let me try and explain it as best I can. So technical reasoning, if you look at here on the 1 hour chart, it looks a lot better, right? On the 1 hour chart, it looks fairly reasonable. We are in an absolutely upward momentum, risk off biased situation. So I ended up taking a long position there as price pulled back to the trend line there, as well as just this level of support that we had found throughout the day. Seemed like price had been holding that level, so I ended up taking a long position and then ended up risking 30 pips at support in a momentum-driven market to the upside. So moving average is lining up nicely on the 1 hour chart, and price looks like it could potentially break higher with this newly found breakout above the 200-day moving average. So that's the other part. We have just freshly broken out of the 200-day SMA. And then I now said also that for the fundamental reasoning, this is kind of a big part of why I took this trade so aggressively, is that for now, sentiment seems to be risk off, meaning investors are piling into safer investment territory. In this situation, we are seeing the euro strengthen and things like the Aussie dollar being sold off aggressively. So really, this is sort of an Aussie short. But I said, if this continues, I think that the risk is worth the potential reward. So let me give you guys just a full, we'll take a look at the chart here in just a second. So I ended up going long, put my stop there, shared it with members. If you're not already in the Discord, by the way, there's a link and description in the description down below with a promo code if you would like to join us to get a discount inside of our group. We're also doing 25% off right now on the gold membership. So if you use that code and join us with the gold membership option that we have on the website, you get access for a one-time fee, and it is discounted by 25%. So if you've been meaning to join us, now is your chance to do so for a cheaper price. You get access to our chat rooms, trade ideas being shared by our veteran traders, as well as Frank, Patrick sharing their trades. We have live coaching webinars with Joe Barreca from Australia. He's a very experienced trader sharing his insights and answering questions for members. We have educational material, all sorts of stuff. So if you're not already in the Discord and if you want to join, link is down below in the description. So let me look at this. So it looks fairly aggressive, and that's because it was. I took the trade back here on this candle here. I ended up buying into that. We'll see if it wants to play out, but even if it doesn't, let me show you why I took the trade. If we go back to last year, 2020, let me show you what happened with Euro Aussie. This is what you call a massive unwind from risk on into risk off. Okay. We saw a massive run up on the Euro Aussie. This may not look like too much, but let me show you. Let me put this into perspective. From the low here to the high, that is a 3,655 pip move to the upside. That is absolutely monstrous last year during the pandemic. So the reason I launched or I picked up into Euro Aussie is because this has the potential, if the markets get scary, to launch. And if I'm wrong, I can risk a very, very small amount relatively to that. We do see that typically when things are scary, when we have risk off sentiment come into the markets, we have a tendency to see the euro get favored over the Australian dollar, right? As people sell off that riskier asset, the Aussie dollar, in favor of the more stable, relatively speaking, euro. So I took that trade, like I said. We'll see if it plays out nicely. If it doesn't, then I will, at this point, I am worst case break even. So it's a good spot to be in. And best case, if we catch a big runner there, again, it looks fairly aggressive. And like I said, that is because it is a fairly aggressive trade. But I think that, with that breakout above the 200-day moving average, with this momentum and with the Aussie really getting unwound right now, I think it has more potential to the upside than to the downside. And like I said, worst case scenario, I take a very small, actually at this point it's break even. So I can't lose on this trade theoretically. So good spot to be in. At least that's what I think. I also bought Euro Aussie, but I closed today for 100 pips. Hey, good for you. Great trade. So that's not like you, Nick. Well, don't worry, Victoria. I had a reasoning and I had a very calculated risk. I even took like half a position on this. So I took like a really small trade knowing that this is a momentum driven market. So for example, everyone says the old adage of buy low, sell high, right? But sometimes there are environments in which it pays to actually buy high to look to sell higher. So if this momentum does continue, right, like it would on the downside or to the upside, the risk to reward there on a very, very small position size is worth it to me. Like I said, if you had looked for a minor pullback on the lower time frames anywhere in these candles, you made amazing profits, right? So it is a calculated risk, although it looks a little funky on the daily chart. It is one that meets my criteria for an aggressive entry. And like I said, I took a very small risk on it. So worst case, we're looking at a break-even trade. Best case, it could be another runner should things get scary. I do want to look at the VIX today. The VIX, we talked about this yesterday. It is a measurement of volatility, essentially. It is an instrument that tracks, I like to call it the fear gauge. And we did see the fear gauge sort of spike in the last few trading sessions. So we'll see if that can continue. We have been seeing these lower highs on the VIX. Question is, if this is a serious potential sell-off in risk on assets, can we get the breakout above that? Can we see prices, get to a higher high there on the VIX? That would be a real big signal, in my opinion, too, for the stock market and for other markets around the world, just in terms of risk on, risk off. But I don't know. Maybe you guys agree with me. Maybe you think I'm jumping the gun on the risk off sentiment, and I suppose I could be. But I have positioned myself with a couple of different trades with small positions, tight stop losses, and at this point, I only have 2 trades on in my main account that are both sitting at break even. So I feel like I'm in a decent spot. I don't know. What do you guys trade? And let me know in the chats. Thank you guys very much for being here with me today. I'm going to wrap up the stream. I hope that you have a great rest of your day. Please be safe. These markets are crazy right now. And like I mentioned earlier, if you're not already in our Discord, come join us. There's a link down below in the description. You can get 25% off of our gold membership if you have not already picked it up, using the code that is down below in the description. It's the first link to join our Discord. See all the trades that I take, as well as Frank and Patrick's trades. We've got chat rooms, trade ideas being shared, all sorts of good value there for you. And you can read up on more information there down below in the description. Thank you so much for being here. Have a great rest of your day, and we will see you back tomorrow.
I know you were expecting Nick, but my name's Julie and I do the real work around here. I wanted to take a second to thank you guys for watching the show and tell you more about some free content that we offer. One of the things that we offer is a free email newsletter. So if you click the link down below, you can sign up for free market analysis, trading tips, and exclusive offers. Every once in a while, someone here at A1 Trading takes a crazy trade and you'll be the first one to know about it. See you guys next time.